everybody, this is Johnny Seville. This is your executive summary for stock setups for Tuesday. And of course, open range was set on Friday with a high on the S&P 500 of 2385.71 and a low of 2377.64. So we have closed 3 points below that range with a close of 2373.47 today, and of course we can see money flow is diverging to the downside. We have not made lower lows yet on the S&P, but we have made lower lows on the money flow. So that is good so far. If we take a look at what that could mean in the short term, in terms of looking at the intraday activity on the S&P. We don't look at the S&P 500 for the intraday activity. We look at the SPY because we can get volume on the intraday volume on the SPY, and therefore money flow and other such goodies. So let's take a look at what we're seeing here. We can see that the S&P 500 appears to be in a short-term head and shoulders pattern. So that would suggest that we may bottom out close to this 236 level on the SPY. We'd look for a rally back up to 237 around that area, 237.50 on the SPY, and that would where we would be looking for a bigger reversal. That would be the head and shoulders. So we would be looking for a decline down towards this 233.50 or just a little bit below that. Now if we compare that back in terms of other levels, you can see that that was a previous resistance level. If we just go back in a little bit, you can see that this 233 area to 230 or even to 234, you can see this is kind of where we're going to get a cluster of support, and that would be where we'd expect the S&P 500's short-term head and shoulders to then reset to a new pattern. So of course day traders and things like that might look at things like the 238 SPY puts. If we rally up to 237.50 and start to reverse, 238 SPY puts might be interesting, and of course again we look for this target area between 234 and 233.50 on the SPY. Now that's a very high risk, very aggressive type of strategy. So of course, consider your own risk management and risk appetite in terms of that. I'm more of a fan of the stocks themselves, but that is a potential play on the SPY. Let's have a look at some of the stocks themselves. Now, we've got a couple of new ones for you, but we'll start with a quick review of some of the existing ones. Stay is having a nice little drop here. It seems to be declining well off of its rising wedge rising wedge pattern here. So it's declined 3 days straight, and of course a break below the low of this 1622 is going to bode well for the short setup on Stay. Of course, the support or the resistance holding that trade down does continue to rally, so that's the one bad side about rising wedge patterns, but it does look like it's retested and seems to be continuing its decline. Now, also looking good, and you can see that this is a rising channel here. Obviously, a break below this support line would be a confirmation of a further decline, and then that's part of a longer term rising channel that you can see here. So it has the potential to get down all the way towards 82, but then further all the way down to the 66 area. So it's a very interesting play there, and has some insider selling and a few other fundamental weaknesses too. And can consider some maybe some May $90 puts. They're $5.91 at the moment. So we'll look at the kind of the May 90 puts. And as you can see, a lot of open interest on the May 80 puts, currently 262. But anyway, so that's, as you can see, right where support is going to be hit on that channel. So at the moment, I've been looking at the May 90 puts, which are 591 as a possible options play, and would wait for that break of that support line here. Moving on to SLCA, this has had of course it hit a short-term profit-taking area just a couple of days ago where it was down at 44. As I said, I expected it may rally back up to 48 and reverse from there, so we can see we have had a good reversal so far from there, and we'll look to hope to see that continue. I'd certainly consider updating the stop criteria to 49.43 though at this point to kind of really lock in all of those potential profits you may have made there. Okay, over to the long side. Again, we'll look at a couple from the review, and then we'll go on to the new ones, both on the short and long side. But Penn National Gaming, of course, we talked about a long setup there after it broke through that resistance line. It's had a nice upward push so far, bit of consolidation. I wouldn't be surprised to see it pull back to the moving average tomorrow, or if it holds, that's even better because that means it's possibly flagging. 880,000 shares on Thursday, 1.5 million on Friday, and only 793,000 today. So that does start to highlight the potential of a flag setup there. And of course, that's the short term coming out of a longer term inverse head and shoulder, which you can see in with these lines here. If I just move that out of the way, you can, and I'll turn it upside down for you. There's the inverse head and shoulder. Shout out to Aditi who actually noticed this one. Great little possible play there, and inverse head and shoulder setup in terms of the pattern at play. Okay, so then we'll go to PRZM is just starting to create some possible support here. Of course, we've been waiting to see this start to rally. If this has a nice push up tomorrow with good volume, that could be ready to go. I'd look at an updated stop criteria on this one of 63 cents. And our other long here flag setup, RIGL, also doing really well today. Had a nice rally up to $2.96, so it seems to be wanting to push. The volume increasing from 1.1 million to 1.19, nothing substantial yet. Obviously, this $3 price point is what we're really looking to break for it to get a nice push upwards. MVIS. Of course, we sent a text message out about this on last week. It started to obviously after the downward channel broke out, retested from that resistance, and then just up and away. Beautiful push. It was up 11% on Friday and up 25% today. So again, nothing wrong with taking a little bit of profit there. Our target's up around that 290 area, but again at 260, there's nothing wrong with taking some profit off the table. I wouldn't be surprised to see that pull back tomorrow. So as you can see, beautiful move, and that comes as no surprise from this downward channel. This has been a long-term downward channel that we've been looking at, perfectly drawn, and as you can see, there's that breakout, which suggesting that that target up here of 296, which is where the where that resistance is also going to come into play. So again, nothing wrong with a bit of profit taking now, but the target up around 293 is where that pattern would become exhausted, and that accompanying with a big volume up from 2.28 million to 8.48 million. And just to go to show, no one could have predicted the fundamental news here. Just beautiful technicals, and as it starts to rally. MRCY, last one on the review, hit its profit target yesterday and today. We're looking for $39 to the $40 range, so nice 20% run on MRCY, and wham bam, thank you ma'am. All right, now onto the longs. The first one, I'm looking at lower price stocks at the moment, ones that have of course, with the negative sentiment in the open range. I'm looking for stocks that are kind of doing their own thing. Now, ALQA is a biomedical company that had a large amount of insider buying from Celgene and a couple of others, and it's obviously had a long decline, and as you can see, all of the moving averages are clustering over the top of it currently. So this is something to keep on a watch. If it starts to break up above this 85-cent mark, this could be a breakout story where the stock could really climb from there, and got some insider trading to support it. So this is one definitely for the watch list. Something that may be a little bit closer, so if it breaks that level, I'd certainly be interested in the trade. AT is the next one, Atlantic Power Corporation. Now, this goes in line with something we reviewed in the big one today, that in terms of a sectoral study, energy has come down for a long a long downward trend run, which also may be the head of a head and shoulders formation. So from a sectoral study, you can see we're right, basically almost at support, and maybe due for a bit of a rally here shortly. Certainly the pattern suggests it, and the longer term pattern suggests it wants to get back up towards 75. So there may be some strength coming into energy stocks here in the next week to come. And AT, of course, Atlantic Power, would fit into that idea. Now, as we can see, if we go back a little bit in terms of this stock's history, we can see that there is a level to break here of 275. And if we go back even a little bit further, just to see how to see if this level is valid in previous times, you can see that that's where the gap down was to at 278. So if we keep that in mind and push that across the entirety of the chart and zoom back in, that level is going to be right here. So I'd be looking for a break of 280, and I'd look at a first target of 327, a second target of 373, and I'd be looking at a stop signal of 263 for now, and wanting to obviously increase that quickly. All right, IPWR. On this one, it's again a power company. You can see it's had a nice run. This is also strong on the insider buying level as well, and so you can you can go in and check that out on Open Insider, one of the news sites that we've been talking about in some of our classes. Again, you can look at IPWR. You can see all of this insider buying. Interestingly enough, you can see it reports the ownership change of up 520%, up 546%, up 424%. So there seems to be some interesting buying. It is a small stock, but these are the kind of things that sometimes have a bit of a life of their own, right? So IPWR is moving, and of course this is also what I was pointing out on ALQA, where you can see that interesting buying across that particular stock as well. Celgene Corporation picking up over $2 million worth, increasing their percentage by 131%, as well as the director increasing his percentage ownership. So I mean, this is kind of where you can go to quickly check things out. So IPWR on the move. And then there was that third stock, Atlantic Power. As you can see, also some steady insider buying from that one as well. So all three seem to have the insider buying. They have interesting charts. On IPWR, I'd look for a pullback to $3.40 to $3.42, that kind of area. I'd look at a stop criteria at $3.17, and my target there would be $4.17. Now, as you can see, with these types of setups, they have a bigger percentage of risk in terms of where the stop criteria may be. It's always, of course, up to you as to where you want to put it. But if we go by those kind of general guidelines, then you're looking at a larger percentage of risk. So generally, we would typically look at investing less in these types of plays than ones where there's only 2-3% stop loss. But again, a good risk-reward ratio, and that's the most important thing. And last on the long list, so there's one watch and two setups that look like they're ready, and here's the third that looks like it is ready, a Cadmon Holdings. New to the market, you can see it, the history is fairly recent, but we do have this falling wedge formation, which we can see here. And we just seem to have tiptoed out of it. And the volume, interestingly enough, the volume was quite strong yesterday, 927,000. Didn't follow through today, only 350,000. So again, the target, as you can see from this this wedge, gives us some pretty good opportunities. The extension suggests a target of 6.32, which is an 85% rally. So there is ample opportunity for something like that. So we look at, say, 622 as a possible target, and then I look at so 622 as a second target. I look at 547 as a first target, or 543, I should say, as a first target. This is from an entry perspective. I would you go and have a look at the hourly chart, and you can see that there is a bit of base of support around here at 380. So I'd look for a possible either a break above this resistance you can see building. It's closing nicely at the top of the range. If it breaks up above 409, I'd consider that a decent entry, or pull back to 380. Either way, I'd look at a stop criteria of 367, and again a target of 543 on target 1 and target 2, 622. Alrighty, so there's the longs, and now onto the short side. Let's take a look at, firstly, IMPV. Now this one has got some big insider selling. It's coming out of this kind of upward channel, just breaking down, closing in the bottom half of the range. It's going to struggle probably with this trend line as well. Both seem to be in play, so it really needs to break below 39.19 for a confirmation. But it's got a big insider selling, a 7.7% short float, a price over free cash flow ratio of 239. So I would, the early entry criteria here would be a break of 40.73. And I'd look at a stop criteria of 43.07. My target on this would be a longer term play, looking for the bottom of this possible head and shoulders pattern that you can see building here. So again, it's not perfect because we don't really come down and touch the neckline here. So we're going to be looking at that as it drops. But I would look at a possible long-term target there of 26.33. For an options play, I'd consider the June 42.50 puts, which are currently 391. From IMPV, we go to CRM. Now, this has been on our shortlist before. Of course, these are application software industry, and this one is setting up with a possible Adam and Eve double top. So we're in an area where the pattern it's not a strong level of resistance, so I'd want to see it break down first. We do have a strong level of resistance back here, and the money flow is diverging nicely in the short term. So if this one was able to break through 82.46, I look at say a stop signal around 84.57. So there's just about roughly $2 and change of risk there from a stop loss standpoint. I'd look at 78.33 as target 1 and 75.13 as target 2. The main area it's going to really need to break through is this level right here. This is really going to be the make or break scenario. So as it gets down to this level, that's where I would want to be protecting the entry point. Now for possible options, I look at the June $85 puts. They're currently $5. So there you have it. There is a list of a couple of shorts and a few long potentials. There are plenty on my list of watches. I've got 4 excellent potential short setups still on my watch list here, and about 6 other longs, which are mostly in the energy sector. So that'll be energy and pharmaceuticals, and that really does show us where the sectoral weaknesses and strengths are. All of the longs seem to be in pharmaceuticals and energy. All of the shorts are coming from semiconductors, application software, business services, and that really goes to show really where the market sectors are starting to shift. Now, we did a several-hour-long, fully in-depth theory lesson tonight on how to actually analyze all the smart money, how to understand sector rotation, how to analyze all the sectors to see which ones are in the strongest setups and weaker setups, how to look at the insider buy-to-sell ratios, how to find where the insiders are selling the most or buying the most in all the pockets of the market. That was our part 1 of the big one, and we did that tonight. Because there was so much of awesome information to go through, we did decide to extend that to another lesson, which we'll be doing on Wednesday night at 8:15 p.m. Eastern. So if you wanted to get in on the big one lesson and missed the chance, you've got another opportunity. So you can sign up by going to acornwealthcorp.com/big one. and we'll make sure you get the recording of tonight. And of course, you'll be invited to the live lesson on Wednesday, which is where we then apply all of the lessons we discussed and taught tonight to actually scan for opportunities. So that's where all the meat of the potential setups are going to come, is going to be Wednesday night. So again, if you missed tonight, still another opportunity to be involved. acornwealthcorp.com/big one. It's only $97, and based on the commentary tonight, it's already paid well for itself. So again, hope to see you there. Otherwise, see you all in Trading Room tomorrow night.